Good morning. SMF MMTs. What we're going to be analyzing in your SMF platform, isn't it beautiful? It's nice. Here I'm going to populate the historical data on the charts that the MMTs. Boy, look at that thing zip. Man. Okay, it populated all these weekly diamonds right here. And basically for the MMTs, they already know that that's all the data that's stored in here and how things work and pricing, buy and sell. One means I go long the S&P and the other means that I short the S&P. What we're talking about is that on Friday morning in pre-market futures, if you go to stockmarketfunding.com, you will find out that on 11/12 that all SMF MMTs were directed to go short the market. But prior to that we would be looking at the weekly reversal. And on Google chart right here in your platform, and each one of these lines are $15.69. That's a delta MMTs. And basically we can look under the SMF MMT hot rod hood down here, because right in here it's going to tell us exactly what the relevancy and price action momentum is. Weak? Is it strong? Is it medium combined during the weekly price action within the actual exchanges during this last week? One thing that we're going to point out to you very carefully and very clearly is that we've got the biggest 1 week reversal in the last 5-day period, and you have them all mapped out down here under the hood. So right now MMTs, I can take a look that at 620.57 is half of this price action reversal bar. And right now when I look at these other bars that are in here, it's going to tell me what that means. It's all going to dissect the actual relevance of where the key reversal comes in and what they mean in a mathematical equation. Because what it does is it finally tunes up the previous behavior of buyers and sellers. It's called the human behavioral exchange transactions that take place, meaning that there's a sequence of behavior patterns in price and action that have a tendency to repeat themselves many times over. And what it really does in the MMT platform is that it really pinpoints that. So when markets do have reversal tops like they did over here, we know that sliding the bid, sliding half the bid, and holding up at teeny action, delta. And when you can't go higher here and you come up, you start building in your shorts. And on a weekly level, there are 5 actual trading days that equal one of these price action bars. This one's very nice. Slide that bid. Once we got down here, we consolidated because we shorted this high. That there was a doji. It was confirmed when it went below it. When it started to get a more negative ratio working in the MMT platform, the weaker the movement was. That's number one in price action, and the reason why it would fall would be number one, the weaker price action movement between the buyer and the seller, that human transaction, that's called behavior pattern transactions within Wall Street, took place, and they slid that bid, and that was the time to get net short. And for innocent people watching the video, look, there are mechanics, as MMTs understand, to these reversals. And basically each one of these lines represent a certain mathematical equation that the MMT platform actually populates all the prices for the MMTs. That's the nice thing about it. And they have great confidence in what they do at price action. And their confidence level is always 100% accurate in them because they're able to pinpoint the actual price action failure is one and price action made is another. So this is a very key weekly reversal, MMTs, on Google. And basically, when you take a look at this last big bar, and a lot of this was earnings related. We were in the trade. You can go to stockmarketpending.com and you can see those back on whatever it was, the 14th or 15th of October. We were involved in that, and that's where these weekly bars came from. But now the alarming thing is that we have finally slid that bid. And basically, MMTs, it's a big one because right here, this current bar is 616.03. And the name itself, let's see what its stats are. Oops, I'm sorry, I hit the wrong button. Ding, ding. Let's see what the stats are in the brain. On this weekly high here and weekly low that I have calculated when I click in here is that the weekly high was 625.08 and the low in this whole thing was 436, and it's calculating that whole movement. That was a huge move up to those highs if you were getting down here where we were buying with price action. And so basically what I want to show people is this is a weekly chart versus the other one. So let's close that one out. And what I'm going to do with the Google chart is this. MMTs on the reversal, you can see here in this last price action, if we start to fade half of this bar right here, and basically what I'm going to do is I'm going to highlight and we're going to go down here and we're going to take a look at this bar, 610.12. And basically that's this bar right here, and that's 10/18 of 2010. Week. If we come down and we start to break that bar, we could come down to this next teeny line, and part of our options trading during next week's options expiration is to get in where that teeny weekly line gets made and then pops. And basically on Sunday morning, because today is Saturday, but on Sunday, tomorrow morning, we'll be actually doing the options entry prices for the very exciting options coming week ahead of us. And basically what the MMTs are going to be doing is they're going to be getting wholesale entries based on the buyer being shaken out of the position. And that's the way it's going to be. The MMTs at that point will engage in wholesale price action execution. And that wholesale execution is their profits, because what they get to do is sell them back to the public for a profit. That's what they get to do, because they're very well in tune with the price action once again. The important thing about it is when they slide the bid, when to get in, when that buyer is being shook out, when that turnaround would take, and you'd be looking for a weekly up bar. So let's say that teeny line did hold and we started Monday coming back up. Half of this bar right here, unfortunately, 616.03 is going to be resistance. And until you're closing above that pro action bar right here, that pro action bar, is that you're not going to go higher. You've got to close and consolidate. You can tell that a half close is a negative 17.28 ratio. That means that that weekly reversal, due to the fact of that ratio being minus $17.28. And what does it mean? It means it closed half below this last bar. This one right here. Half, that's from bottom up, top down, doesn't matter. It's half of the price action bar where buyers and sellers meet during times of exchanges and execution exchanges that take place there in New York on the floor. And in a 5-day period, you can see that this number will have to contract. If this number was to go down, let's say minus only 2, you would have a huge move off that teeny line to the breakout side, because you would. And basically what we're going to be looking at is if we can get the 590 calls for the expiration next week. Just remember that today's date is 11/13/2010 and the current time is 9:14 a.m. Pacific Standard Time. So price action, we are going to be what will end up happening, MMTs, is that when I populate this right here, watch these gauges move. Wow, it's doing that. Boy, look at that. Anyway, right in here, we populated the IR, bid and ask ratio, and the half bar and closing half bar. These 1, 2, 3, 4, 5 areas. That's all you need to be concerned with, MMT. Because what we're going to do is that when this ratio right here, that 17.28 ratio, price action ratio, turns in a different direction, that's when the SMF MMT is going to know when price action was made. The final touches are going to be this right here. So if I go up and I hit that price action area, then that means that I am going to sell into the strength, and I would also be a put buyer right there. If you can't close above that weekly half action bar, then you need to be adding in on the put side of the market. When it goes up and hits it and it rolls over, you need to be adding, because they'll take all the put premium back out. The put premium this last week has had a good advancement going into the options, meaning that when I show the options charts tomorrow morning on Sunday, that's a good way to start out Sunday morning, MMTs. It truly is. So basically, as a 3-part segment is that we've had these great teeny our delta breakouts in our system, and we've enjoyed that, and now we're at a top, and basically on every top reversal and price action, it's all about where this ratio stops. And this is a ratio that I'm trading right here, MMTs. Basically, if that starts falling down toward 10, I'm going to be making good price consolidation, and I'm going to break higher. If I go where that this total is erased and goes into a positive territory, I'm going to come back up and break those highs, and that's what we're going to be looking at during that options action next week. And where the price action and the deflated from an inflated call value, meaning inflated means a high price, down to a wholesale level on those options, man, you pop 50 of those contracts at $7.50 and sell them back at $12. Hey, that's $7 move on 50 contracts. That's $35,000. That's the kind of action next week. SMF, MMT. So tomorrow morning we're going to be doing those options, and I'm telling you, we're feeling good about it. In fact, we're feeling so good about it we can hardly sit in our chair. And it's only Saturday morning. Monday's not even here. But that's how you feel going into a wholesale price, MMTs. It makes you feel good that way, because you're going to get hit in that price action and you're going to sell it back to the public. And this is a weekly SMF MMT trader. This is our market maker platform. The SMF market maker platform. It's purely based on being in the total middle of all the floor traders and market makers and the public all at the same time. And basically what it does is that the info panel down here is a repeat behavior of players within buying and selling in this name, is they repeat themselves. See? They repeat themselves. And now they're repeating themselves here, just as I did over here. This was where the Chinese came out and said that Google wasn't going to do business in China no more, and then they dropped the stock from here to here. This was where the buying was. Now, you know, things have changed at Google. So basically, it's 15.8 minutes into this tape, but I'm just giving our MMTs what they need is a good 3-part series of the weekly chart, and this price action is going to get made in here. And this info panel down here is going to guide you through it. And basically, we have various other charts. You'll have your 60 minutes because they have different calculations during the actual intraday price action of the Wall Street tape, the Wall Street exchanges. Basically, what do is that we take prices when it's favorable for us because it tells us where the public always is. It tells us where they all are. And, you know, what's ironic is that price action has a way of repeating itself so profoundly accurate, as you can see within these lines. The platform automatically draws them. Once again, you've been given a gift, the MMT, and that's that gift of that price action next week and the options expiration on Google.com.